evening, stock traders, and welcome back to Stock Traders Talk Radio. I'm your host, Stock Sumo. Thank you for joining us on this wonderful Wednesday, August 15th, 2012, where we have an exclusive CEO interview lined up. And conducting tonight's interview after a brief hiatus is Cop. Cop, it's a pleasure to have you back.
A hiatus. Yeah. I've been gone for a little while, and thanks for having me back. Evidently I'm not fired, which is good news.
Well, I know you've been busy, and we've all been doing a good job filling in your shoes, and we know those are tough shoes to fill. But without any further ado, take it away.
I appreciate it, there, Sumo. We're here with Mr. Edward Withrow III, founder and chairman of the board of Ecologic Transportation Inc. Ecologic Transportation Inc. trades on the over-the-counter bulletin board under the symbol EGCT. In this interview, I'd like to cover the recent LOI to purchase Ace Rent-A-Car Inc. and the settlement with the former CEO, William Plumondon. Welcome to Stock Traders Talk Radio, Mr. Withrow.
Thanks a lot, Cop. I appreciate it. I'm excited actually to talk about these two subjects and a couple of others that you might want to bring up that we haven't quite kept our shareholders. This is I think it's been almost 9 months since the last time I did an interview, so I'm excited.
Well, we're excited to have you. How about if we get started with telling the audience what your company does?
Well, Ecologic Transportation was formed to take advantage of what it saw as a void in the car rental business of a pure environmental car rental company. And we saw a need for it, not just as a gimmick, but because we saw the adoption of environmentally friendly cars by the consumers starting to grow larger and wider. And the second part was the car manufacturers had a pipeline that was increasing of hybrids and electric cars and flex fuel vehicles. And so we looked around, and the market did not have or wasn't meeting the needs of a growing customer base. And so we basically formed the company. We formed it originally with 3 units, and some might say high concept, but one was car rental, the other was the products, which would be interrelated environmental products, and the third was systems, which focused on alternative fuel retail distribution networks. The systems part of the business was about 6 months ago, spun out, and the products division is and has been operating for a little over 2 years, primarily in the area of the water space. We have a proprietary product that is called Ecologic Shine, and it is a waterless car wash. And then the car rental business was, after a lot of deliberation, was built around the idea that we would look to acquire and then consolidate Tier 2 car rental companies on a multi-geographic footprint here in the United States, and then over a period of 4 to 6 quarters, convert their brands into the Ecologic car rental brand and have it be positioned as a pure environmental car rental company. And so that's basically that's why we were formed. That is the business, and it's the business that we sit with today.
Excellent. Now, what is your background experience?
I'm some call me a serial entrepreneur, but I've been involved in finance, venture capital, some private equity. I do have some interest, a lot of interest actually, in life sciences and some other biotechnology companies. But I think that I'm more agnostic when it comes to the industries that I focus on, and more on the opportunities that I see in a marketplace. But I have to say that even though that my background is somewhat agnostic to the different type of businesses that I've been involved in, whether finance or what have you. This business is ecologic car rental and environmental transportation and environmental automobiles is huge. It's and I don't want to be overblown P.T. Barnum here, but it's transformative. And we're in the middle of literally, and it could be 5 years, it could be 20 years. We don't really have our handle on the time, but we are in a huge paradigm shift. And it's starting to transition from the petrol space to a myriad of alternative fuel transportation vehicles. And this is what has me probably the most excited, that I get to be able to work with a good management team to build a business that happens to be at the right time, at the right place, and be part of and help, at least from our position, help facilitate increased adoption of these alternative energy vehicles. And so even though my background's in business development, finance, management, I've been a CEO of a number of companies, a couple of public companies. I'm the chairman of another public company right now that I hold large interest in. This company is different. It's almost as though we play a role in helping consumers come to get to know these alternative fuel vehicles, such as the electric vehicle, hybrid vehicles, consumers that don't want to go to car dealers and just buy them right off, but they want the comfort of renting it and getting to know the vehicle. And believe it or not, and again, this might sound a little P.T. Barnum, but I think our company is about to play a pretty important role in exposing alternative energy vehicles to consumers, and I can point to a number of reasons that it is necessary that a company like ours help facilitate the introduction of these cars to consumers, because there has been, like in anything, when you went from a VHS to a DVD, these are slow migrations. And one of the things, like I'll use that example, with a VHS or a DVD, you'd have to buy the DVD machine before you could use it. Right. Well, in a lot of cases, with the electric cars, you have the same thing. You have to actually go and buy an electric car. And maybe you can test drive it, but I mean, you don't really get to drive around for days or a week or what have you and get to know the vehicle. And with the ecologic car rental platform and our business model, we're able to provide that service for the consumer and then also for the car manufacturer.
Oh, that's excellent. Just to ensure that the listening audience has a little background, what's the makeup of your board of directors and the reasoning behind your team that you have?
Well, the company was put together really, and I'm going to end with William Plumond, but Bill was a core part of the development of the company, and his background was in car rental. And though he's recently left, we kind of built a board that was either part of the automobile industry, car rental industry, or the environmental industry. We have Dr. Martin Blake, who's on our board, who is the head of sustainability at the Royal Mail, which is the largest fleet operator and largest employer, actually, in the UK. And we have John Ogden, who's a financial professional, an attorney. Actually, he's a barrister, too, from the UK. We don't favor the UK. It's just the way it happens. And he brings an international business acumen with him. And then we have, and we're recently going to announce another director who is is a alternative energy development executive on a global scale, who's done some very significant projects in the green space. We brought on William Nesbitt, and I really wanted to apologize. Bill was going to be on this call here, but Bill is en route right now, not happy, but he got held up in Dallas on his way to where I'm at in Santa Monica, California, where we're going to be leaving tomorrow for China. But Bill Nesbitt was one of the early founders of a company called Alamo Rent-A-Car. In fact, was the owner of its predecessor called Olin Car Rental, which was founded in New York and then moved down to Florida, and Bill hooked up with some other gentlemen, and Alamo was formed, and he was with Alamo and instrumental in its development and expansion up towards the sale to entrepreneur Wayne Huizenga for a little over $1 billion. Now, Bill is the CEO. Earlier there was a mention that I was the CEO. I'm the chairman and founder. But Bill Nesbitt came on approximately, and I'm just using roughly 9 months ago, and he brings a number of things. Obviously, a huge understanding of the car rental business, depth in operational growth. He also brings experience in consolidation and H&R integration, which is foundational to our strategy, our acquisition strategy. And we could not be more pleased to have him as part of the team. So
that's awesome.
Yeah.
All right, excellent. How about if we go into talking about some of your objectives or your business plans or some of your strategies? So what's your strategic direction right now, or your business objectives?
Well, let me first, and I'm going to reiterate the reason, the positioning, the reason that Bill Nesbitt came out of retirement to come help me with this, the reason that I've been able to keep these shareholders, the loyal shareholders we have, to be patient with us while we finally have getting poised to execute, is because there's a reason for the business. Meaning, before I tell you what our strategy is, I just want to say that a lot of businesses, and I've been an entrepreneur and a financier going on 23 years now, a lot of businesses just shouldn't be there. And no offense, but people don't look at a market, or there's a lot of replication, and there's a lot of reasons where, in hindsight, when the company goes under, people look back and say, oh, shoot, we should have looked at this, we should have looked at this. Well, when we looked at developing this company, we went through the normal due diligence and checklists and all the market analysis, like, should we even start this? Because building a business is hard work, and it's just really, you have to be into it. It's not just a job. And so before I talk about strategy, the main thing I'd like to say is there is a reason for this company to exist. There is a position in the market. There is a reason that consumers would be able to say, okay, I rented from Ecologic Car Rental, and I know what I'm going to get. And I guess the best way I'd like to illustrate that is if you took, and I'm not putting any car rental companies down here, but if you took all the car rental companies and stripped their brands off, took the logos off the shirts, okay? The only way you'd probably be able to truly differentiate all of them is the ones that really battle it out for price.
Mm-hmm.
Okay, but if all of a sudden here's a rent-a-car company, and it only has environmentally friendly vehicles, and that's its positioning, we now have a reason to be. And that's the beginning. Before I talk about the strategy, I just wanted to say that we truly, both the management, the board, and the loyal shareholders to date, believe there is a reason for this company to be. Now, our strategy has been pretty clear, and I'd have to say it's pretty simple. It's kind of old school. We could have done this two ways. We could have opened up a couple of shops around the airports. We could have picked up some vehicles, started to market, and build a business. That's pretty traditional. We chose to look at going the acquisition route, which to a lot of people seems easy, and the reality is it's not easy. And if you don't know what you're doing, you don't succeed when you're doing these roll-ups. And it takes a lot of depth and acumen and management sophistication, I believe, is my personal opinion. But our strategy has been to go into the second-tier companies, the independent car rental companies, identify those that are multi-geographically located with some scale, and collectively they represent somewhere in the neighborhood of $1.6 billion in market share, but they are known regionally but not nationally, so on and so forth. And we would look at these companies to use as a platform whereby we could, and this is where the strategy comes in, we identify the company we would want to acquire. We would work, which is their management is key to the entire package, if you will. It's not just the financials. It is the management and the tenure, and that I'll get into that when I talk about it. But we look at that platform, and then we make sure that it is scalable so that once we go in, the plan is very simple. We go in, we work with the management, we co-brand with their brand, and we put up a little shingle that says Ecologic Car Rental, and we start to introduce some of our cars. And then as the cycle of cars moves out over 12-month to an 18-month period, that's how car rental works. You rent over a period of time, then you put them out for sale, usually under an 18-month period. We move the Ecologic brand over, so over a period of time, the company's brand converts to the Ecologic brand. And we're cognizant of the very, very, very important part of this whole pie, this business strategy, which happens to be the customer. These people who build these companies, who succeed, and business is tough, and anyone who generates over $1 million in revenue with a small business, my hat's off to them. Business is difficult. Keeping customers is difficult. Servicing customers is difficult. Heck, paying your bills is difficult. So we're very cognizant of the importance of making sure that how we do this co-branding and transition to our brand, that it's not all of a sudden we come in and we say, here we are, we're all green and everyone's happy. We work with the brand to make sure that there is the smallest amount of attrition, and the customers are educated on what we're offering at Ecologic and excited about it, and the employees are excited about it. So that's the first step strategically of what the company does. It identifies a company from the business plan, identify a company, do its due diligence, make sure it's the proper company, and then for our strategy, go in, transition over to the Ecologic platform, and then start to look and expand to other geographic locations. The key is the multi-geographic locations, so that we start to have not just regional but multi-regional visibility from a branding standpoint, which enhances the value of Ecologic. And then the idea is to consolidate and bring in efficiencies into the acquisitions, economies of scale, and then you start to grow the business as any other. It's really block and tackling at that point. Sure. There is strategically the marketing is exciting. If you think about it, no one's done this, so therefore it's a blank canvas, but there's certain fundamental realities of marketing, positioning, advertising that every business faces. And we are excited to be able to not only work with internally with our own team in communicating the Ecologic Car Rental brand to the consumers to bring them in, and to the corporate customers to bring them in, but also working with the brands, the cars, the car manufacturers on how they're positioning their new offerings. it's an exciting collaboration. And I think that is the business. There is not a lot of moving pieces. We do expect to generate revenue from car rental, from potentially evolving with some car sharing programs, reservations, and car sales.
I was sitting there thinking while you were talking, I mean, the market segmentation piece before you started talking about it, I was thinking, man, that has to be fascinating to do that part. I'm curious, where did the concept come from? I mean, to actually go down this business path?
Well, there was a small company founded by a gentleman named Jeff Pink in Los Angeles, California, and he had started this electric car rental company, and he had built it up, and he was a purist, and I think that at the time he was ahead of his time, and I think that what I felt was missing in his business was that he didn't position himself to, one, grow and be agnostic to other alternative fuel vehicles. And I would mind to tell you that we do believe that high mileage vehicles are environmentally friendly and one heck of a lot better than a 12 mile per gallon vehicle. So we do and will rent and look at renting cars that are 40 miles and above. And I think that and this was early on when I was bouncing this off William Plumondon, and he basically said that he thought it was a good plan, and I felt that we needed the products, and I felt we needed the systems, because the products, we could be a testing these cars, and the renting could be a testing for a number of different automobile and OEM related products that are environmental, that are coming onto the marketplace. And then secondly, as I said in the beginning, and not to be too P.T. Barnum about it, and I know I keep saying that, but it sounds inflammatory, but we are at this enormous precipice, if you will, of transportation transformation. And I believe that one of the things, and this is why the systems initially had played a big role in the business model, is that we were looking for solutions that these cars could fuel up, both electric, biodiesel, CNG. And the great thing that has happened is market conditions have gone our way. If we had to come out a year and a half ago, or even 2.5 years ago, when we were formed, we were formed a little more than 2.5 years ago, we would have faced some headwinds, and call it luck, call it good fortune. We didn't go into the marketplace early. You know how a lot of pioneers, you hear about it, pioneers get slaughtered. The early ones sometimes.
Second the market.
Yeah, if we had gone in there a little bit earlier, the debt markets weren't there for us. If we look back at the market capitulation and all the things that we as a country and globally people went through. And even though the economy is fragile and the economy is not growing the way that we would like it to grow, I'll tell you right now, if you look at 2008, 2009 compared to today, we are in a much better position. The banks had basically sewn up the debt markets, and that would have hurt us from a financial standpoint on fleet financing and acquisition financing, and just having the credit markets is bad also for the resale of vehicles, when the credit markets tighten up. So the timing for us coming out now, in the past, we've really, I think, hit our stead in the last, say, 4 or 6 months. we couldn't have had better timing. I think both from a standpoint of that the entrepreneurs, big businesses like GE are putting in electric charging stations all over the United States. Retail gas stations are starting to put in alternative fuel. The infrastructure is starting to be built up. The cars, if you look at the number of vehicles that are coming online from the manufacturers, from the domestic manufacturers, from the international manufacturers, is expanding and getting deeper. And it's almost like a perfect storm for us. So I think that and I brought this. I went on this tangent, if you will, mainly because when we were conceiving this, a lot of the things that are out there now, like multiple EV automobiles commercially available, they weren't there, and the push, the orchestrated push for electric charging stations, systemically positioned, wasn't there. You also you had increased pricing in these vehicles, where the vehicles have started to come down and be much more accessible price-wise for the consumer. And this is part of our luck too, because as a car rental company, if we're going to go out and we're going to be position ourselves with environmentally friendly cars, it is difficult to try to do that if you're going to position your pricing differently. You might have a small premium, and yes, we might, but the reality is we have to be competitive in our pricing. And the vehicles that we're going to be acquiring, the pricing has started to come down precipitously over the last 18 months, mainly because of more of the product is coming online. And that has made both the economic thesis better for us. It also made the probability, and I don't want to use that on the radio, probability of success, but it sure didn't hurt. I'll tell you right now, it sure didn't hurt having the cars be more comfortably priced, mainly because it allows us to expand our window of offerings. So when people rent cars from Ecologic Car Rental, they're actually having a variety. They're not just looking at one or two different hybrids.
No, that's let's elaborate on that just a little bit, because I mean, what's the significance of the industry, and and more specific, what's the targeted audience for your service?
Well, there's two. Those are two big two questions. The industry itself, Matt, is and again, I don't want to be inflammatory. It's extremely exciting right now. I can name a number of polls, be it the Harris poll that just recently came out about the increased adoption of hybrids, and those looking that would look at purchasing EV. So you have a marketplace of manufacturers who are saying, you know what, we're going to bet, and you have to really give your hands up to the manufacturers, because they take a huge risk in making this big transition, but they're committed, they're all in. So your first part of the question was about the industry. Well, the industry is as any industry is entering this new period, but it's making its bets on the table, and anybody can see this is black and white. The bets are that the public adoption of environmentally friendly vehicles and the consumer demand for them, they believe their betting is going to be consistently moving upward and broadening, and so it's not just what you might consider green, quote unquote. And I'm not saying this in any other way, but except for what you might call activist liberal green, who pure environmentalist. But the market is growing broader to suburbs, to moms who buy organic, who think of the health consequences, it's starting to broaden. And so the industry is poised, just by analyzing the product that they're putting in their pipeline, they're betting that this market is going to expand and grow, and we hope that we're a partner in that process. We hope we grow as they grow, and we help facilitate that consumer adoption. That's the first part. The second part is almost just as exciting. You know, there was a KPMG white paper that talked about the consumer advantages to green positioning. But there was also another one that I've always related to. It was 2010. It was the Boston Consulting Group had the green advantage for consumer companies. And it isn't that, you know, when you talk about why a company would have an advantage, it means their target audience is responding, right? It means that they care. Well, the primary, if you will, I shouldn't say primary, I don't want to get caught up and have someone mix words, but the large target market for us is women, mothers, heads who make a significant contribution to the decision-making of the economics of the household. They care about saving money. They care about the environment. They don't particularly have to be Democrat or Republican. They start to see, and statistics show that they poll and believe that environmental is very close to organic and it's healthy. And so you have a huge growing market. This is agnostic, I believe, to either Democrat or Republican, but a growing market of women who are making a lot of the decisioning when they're purchasing the vehicles for their family and for themselves. Then you have this growing group of younger people, the 18 to 28 crowd, if you will. And this crowd is just dynamic. They almost expect, they are of a different, I'm 48 years old. I was the last year of the baby boomers. And my view of the world, you know, the Brady Bunch was still on TV when I was a little kid. So these groups of people have a different view. They expect things to be good for the environment. They expect quality things to work. They expect when you say that the car does a certain feature, that it will do that. They want things that are good for the environment, and they've proven this in poll after poll and also in their buying habits. Also economics. So we're now talking again about our market, target markets. Economics is a big driver. When you can get 40 miles to a gallon and still safely drive around your family, you start saving money when gas pushes between $4 and $5. I just noticed the other day where I'm at here in Southern California, the gas has now budged over and sticking around that $4.05 to $4.30 for premium. That starts to be a pinch. And here, think of this. If you have driving a regular vehicle, but you want to really maybe think about moving to a hybrid or even an electric, your only choice is to go just into the dealership. And I'm not saying it's bad, but a lot of people are, you know, not so comfortable with that. And they're making a purchase of a car is one of the largest decisions a family makes with their money. Well, if they can come to us and rent for a week and really get to know the vehicle and maybe try another one, maybe not just a hybrid, but maybe an electric, we believe that not only would we ourselves provide a serious service to the consumer and the manufacturer by just doing that, but we allow them to look at purchasing. And if you think of our business model, remember these cars stay with us for 18 months, and we will be selling them after that. A lot of that in wholesale, admittedly, but we're going to look at some other options of branding for our own sales channels. I mean, that's down the pike, and it's not been merited out. But if you think about it, it kind of lends itself. You're renting from us. You're getting to know the vehicle. We have certain cars that are now being resold. We believe the used car market for alternative vehicles would also be a fast-growing market, just because it's new. It's a new portion of the pie of all automobile sales that is expanding, but it's still a small portion. The other part is we have economics I just talked about, which means that people $5 gas really affects people's lives, and higher mileage is a good thing for that. Second is the young people, right? The third was women and mothers, family. We call them economic heads of family. I'm not saying we. Okay, that's a term I use. And then the last is corporate, because corporate imaging is important. And if you notice, I don't have to sell you guys, or I don't have to convince anyone listening to me right now. Your corporations care about looking like, and actually care about the environment. And they want, and most corporations today have sustainability programs. Right. And those sustainability programs involve car rental. They involve every part of their business. They involve recycling. They involve messaging. And we believe that the difference between renting from us and renting from a big name brand car rental company is that we allow the company to position that they are. This is one check off of their, one check off of their list of things. They have their recycling, they have their different initiatives. But car rental for a lot of companies that do a lot of travel and distance and management, it's part of their budget. Now, so you have corporations and corporate branding and positioning in line with sustainability and sustainable messaging. And then you have, last but not least, government. And I believe government, municipality, and I know it's become a negative word, and I wouldn't step into that briar patch if you dragged me. But I do believe government's the same thing. You could go to India. People wouldn't know this, but Chicago's one of the greenest cities in the entire country. Who knew? Hey, you Los Angeles, Oregon, New York, Boston, Portland, Atlanta, and all these cities, and both at the municipal level, state level, and the federal level, and the military, have sustainable initiatives. And these initiatives involve both fleet. In fact, if you were to look into some of the largest purchases of alternative fuel vehicles, such as CNG, it's government and municipal and state fleets. And so it makes perfect sense, synergistic sense, for us to be the rental car of choice, if available, for these fleet operators when it comes to the fleet for their rent-a-cars. When they use their car rental service, our goal will be to be the choice, if available, for the municipal, the state, the federal, and the military contracts for car rental contracts.
Well, I mean, what you talked about earlier with your market placement and your product placement. There's some fascinating stuff. What are you thinking in the short term? I mean, where do you think you're going to be in the short term?
Well, here's where we're at right now, and thank God we're still here. I mean that seriously, because like I said, business isn't easy, and it's not easy. It's one thing to sit and talk about doing this roll-up and talk about growing a business, but then when you get into the nitty-gritty and you analyze businesses and you think something looks really good when you first walk in, and then you get in there and you say, well, it's not a good fit, and now 6 months are gone, and you do due diligence on another business. Well, where we're at right now is we're extremely fortunate, and I give a real hand here to our CEO, Bill Nesbitt, and to our former CEO, on the fact that we've come to an agreement with this 46-year-old car rental company headquartered in Chicago, Illinois, and Indianapolis. It's co-headquartered, but in Chicago, Illinois, and Indianapolis, Indiana, called Ace Car Rental. Ace Rent-A-Car, excuse me, gosh.
Mm-hmm.
And right now where we're at is we've just come to an agreement on terms. Now we're not disclosing terms for the simple reason that we will disclose once we have the definitive agreement signed, and then the economics come out. And but we could not be more excited about this company, not because I think I guess I can describe it because we just recently put out a release, but the company is a 46-year-old company. It's been in the same family hands for the whole entire time. It's principally run by two principals, tremendous management, and I'm not just saying that because it's the company that we picked, but the management of this company is probably the majority of the reason that we chose Ace. The company has had continual profitable quarters for their 46 years, all but 2 quarters, and those were quarters that came right after 9/11. And so you have a company that is tight management. You have a long track record of successful execution of their business. You have growth, and the Ace happens to be, it's doing, as of March 31st, 2012, its top line, including car rental sales, reservation, and car sales, it's $69 million and change. It's, like I said, it's profitable, and it has this proprietary reservation network. That's another key consideration why we chose Ace. The management had vision to understand the leverage and the scale that a sophisticated reservation system would bring them, and they put it in place, and it started to expand the Ace Car Rental affiliate network, which they have they have an extremely large network, domestic and abroad, and that's, I don't want to go too much into Ace, only because we're in the middle of going through the final due diligence and moving towards a definitive agreement. I just would say about Ace that we one of the only reasons that we did this deal was that management wasn't leaving. They weren't cashing out. They are staying with us. I believe we've locked them in for 2 years. We wish it was 3, but I think they'll probably stay with us. Hopefully, if this is all extremely harmonious, stay with us a lot longer. They're both the principals are relatively pretty young men, and so we're signed. We're doing our due diligence. We believe the company is positioned perfectly for us to start the co-branding, and as Bill Nesbitt says, the melting between the Ace management and Ecologic is led by Bill and his team. It's a perfect match. And the next step is the due diligence. We are right now have circled in our financing, and we're negotiating the terms on the financing. So that's on Ace, but in line with Ace, and I have to be careful on this too, Bill's coming into the West Coast right now, so we're leaving tomorrow for China. And for finance discussions, but also product for automobile discussions. And one of the exciting elements that the timing of what we're doing brings is that the financing doesn't always have to be, our capital partner doesn't always have to be separate and apart from the consumer product. And the environmentally friendly vehicles that are coming out of China and looking in to come into the U.S. We believe there is a huge opportunity. I don't want to discuss. There is a number of, well, obviously there's a number of companies that we've set up and held dialogue and now going and meeting their manufacturing plants and their senior management and so on and so forth. We are under some disclosure agreements but we believe that these cars will complement the Fords, Escape, the Prius, the Leaf, the Hyundai. It's a very exciting way for a manufacturer to look at coming in and exposing their vehicles to the U.S. marketplace. We also will be looking at another partner. Again, we're not able to we're not able to disclose, but this is an Indian car manufacturer, and recently acquired some well-known brands, and we believe that there's a great potential as well with the Indian company. So Bill and I are leaving now. We're going to be gone for a week. We're going to be in China, and we're going to be meeting with the car manufacturers. We're going to be looking at their vehicles, their offerings, their goals, their aspirations. And the cool or the beautiful thing here is there's a lot of synergy. This isn't just a haggling type thing. This is a synergistic thing, and it goes for all the manufacturers. One of the very exciting things is when you position yourself as a 100% green company, yes, it does count you off. You can't have a 12-cylinder truck that gets 6 miles to the gallon, and I'm not saying I have anything against 12-cylinder trucks that get 6 miles to the gallon. So, but even though you don't, you have this universe that's maybe looking smaller. You know what the cool thing is? A lot of people are now pushing their product, and they want to get into this market. And what better way? And we'll put it this way: they're responding. The manufacturers are responding to our thesis, the ecologic business model of giving people 6 to 7 car rental cycles per month on each vehicle. And you can't, the key to selling a car, if you're a car manufacturer, any salesperson knows the key is to get their hiney in a seat. And if you can get them in a seat and get them to know your car and like your car, man, you've already accomplished probably the biggest, the biggest thing you had to get over in a sales cycle, getting someone in your car and having them say, you know what, I like how this drives. This is pretty good.
You know what I find very, very intriguing with everything you're saying? In reality, when you say synergies, it's really synergistic, because you're basically providing the product placement via your marketed service through the various ways. And Ace Rent-A-Car is no small company. I mean, you're talking a substantial fleet that you're contemplating here.
Well, I think it's that, and I think that the management of Ace, this is key, is yes, they've been very successful. They've run a very sound business. And by the way, I want to point out, and this is very important to me, culturally, they're cool people. And I don't mean to be blasé about that, but culturally, they have something going on. They were voted, I don't say it's voted, they were awarded, I don't want to use this, they received an acknowledgement by J.D. Powers as
that's right.
Yeah, for the best car rental company in the United States, and that was in 2011. And
for customer satisfaction, I saw that.
Well, and that what else matters? No offense, but everything is the customers. Talk to anybody in the retail or consumer business. What's more important than the customer? Nothing. And so, but you know what you do when he gets this award? These aren't egomaniacs. They got the award by being who they were and creating a culture at Ace. And this is this was the magnetism. It wasn't the size of the company. It wasn't that they're doing 69 million, they're going to grow, and it wasn't that they are positioned for more expansion and to help us facilitate additional acquisitions. It was because they had a real culture, and that's the important thing. If you're going to go in to acquire a business, boy oh boy, it better be a business that's harmonious, because nothing worse than a business of discord and disgruntled people and bad customer service. And there you walk in and you're like, you're sitting there saying to yourself, what the heck did I do? I didn't do anything. Just let me prove myself. But you have all that legacy stuff. We are so fortunate to be able to get in with a group of people who understood the primary importance of a consumer company, and that's the first word, a consumer. And for us, it's if you asked where the short term is, it's working with ACE. Well, it'll be, obviously, if I ran you through the steps, it'll be doing the due diligence, completing the transaction with ACE, tying up and we will announce when we're allowed to, tying up the manufacturing relationships for the new product offering, and the new cars, and then start into the other part, which it's one thing to sit and talk about a lot of this stuff, but you've got to be able to effectively execute. I think Bill Nesbitt's he's gonna do great, and the guys running ACE, I think they've already proved themselves. I don't think anyone has to look over their back. In fact, the gentleman who runs ACE today, we believe and we hope he will head the entire car rental operation. That includes all new acquisitions and such, and we believe he couldn't get a better guy. But another thing I'd like to point out is we're right after we do these things, the marketing and the branding then comes in, and I mentioned that earlier, but that's a big piece to this. And then obviously when you're we hope succeeding and growing, there'll be additional acquisitions. I don't want to get too prophetic on the acquisitions until, and what I mean by that, I don't want to throw around numbers. I've done it before. We are looking at, you could say there's an aggregate of $350 million, but the reality is we're going to take it step by step. We're going to put out announcements once we believe a company fits the mold, not just when we first get interest that somebody wants to sell their company or be part of our family and our brand, the Ecologic brand. And so I don't want to jump the gun. I just think that I'm very happy that we have the shareholders who've stuck with this company, who haven't abandoned us, been patient, believed in us. I'm very happy that the timing just worked out. The good Lord was looking after us, and for some reason we're executing and starting to fulfill our business plan at proper timing with the market, with the availability of new product, with the pricing of that product, and with the increased adoption of our target audience of environmentally friendly vehicles.
No, that's great. I was going to elaborate on your strategic alliances, but you covered that pretty well. And quite frankly, after your return trip from China, I'm sure there'll be a couple more. Is there any strategic alliance that you haven't mentioned that you want to key in on or anything like that?
Well, I'm not comfortable until even the ones that we've. I'm not comfortable until we're very focused. Put it this way: here's our focus. Our eyes on the ball. We're going to complete some due diligence, and there's not that much on ACE. We are going to complete ACE, get to a definitive agreement, and complete the purchase. We are going to sign the management up and hopefully make them as happy as they are now or more. And then we're going to then the game starts going. Then the strategic partners come into play. Some of these will be part of our, will also be financial partners, but we are going to be agnostic. I want to be clear here. I don't think our our company will work for the different brands in it if it looks like we're just shoving a brand or a car at somebody, at a consumer. It doesn't work with my philosophy. I don't think it would work with the ACE managers, the owners of ACE today, their philosophy. It will not work with Bill Nesbitt. We want to provide cars that the consumer wants. We want to rent cars that the consumer wants to continue to rent again and again. And our goal is to be able to match those cars and those offerings with the consumer's needs, and that's so much that the consumer eventually adopts and buys the vehicle. We will have probably won, if you will, if they buy these vehicles. Now, again, there is a tangential business that's in its embryonic stage, but it's maybe more than that, but I don't want to talk about it because
sure.
But it's in the sales. We do think that the market for environmental cars in the used car market and new market is one that is going to grow and continue to expand and grow. And if you were looking to be in that area, that space of automobile sales, that's a place I would probably like to be. So on the strategic partners, they're primarily going to be auto manufacturers, not all, by the way, but primarily they'll be auto manufacturers. There will be some strategic partners in leasing and such, and we are looking at it, but have not fully vetted out a business model for some strategic car sharing programs located in what I call transitory or leisure areas of vacation areas, and also in and around what I call large college, the top 500 colleges. So we are looking at some initiatives that might expand differently than just straight car rental.
Sure. Close the gap on something for me, though. And
okay, shoot.
There's one piece I'm kind of missing here. I don't understand why the bigger companies wouldn't try to, weed you out. I mean, what's your competitive advantage?
Well, here, it's funny that you say that after I've been beat up and pulverized and had things thrown at me by investors over the past 3 years who've said, look, Withrow, we like this. We think you're right on the market. We think you're right on the pipeline of product. We think you're right on just the total direction of your company, and we think you're right on the positioning. But what we also think is that the big company's going to come along and step on your head. And I don't mean to be crude, and I don't mean to be flippant, but the reality is that is and has been a strong feeling, a bias to our business thesis. But the reason that, and this is where I believe we have a competitive advantage, somewhat like an English Clipper to a Spanish Armada, we're 100% pure play. And if a company starts a division and starts to promote a green division to compete with us, yes, economically, they could do it with their eyes closed. All you have to do is look at the balance sheet of Enterprise Rent-A-Car or Hertz or Avis or any of the big players. But what happens is the more that they promote this green division and they say all the things that we're saying, it's good for the environment, it's good for all the things we believe at the soul of our brand, they start to promote. Well, how does that reflect on the 90% of their company that's not? It's
Sure.
called brand cannibalization, and I have nothing against the car rental companies. In fact, I think the more I've got to know the industry, making money in this industry, you have to be very sophisticated, very creative, and you really have to be run by good managers. So I'm not putting anything down on the larger companies, but I believe that they to duplicate what we're positioning would then put a light on them to show, wait a minute, 90% of your business isn't environmental. And it starts to, you're either going to hurt the one brand or the other. And I think that's why, these companies are run by very smart people. They've got the best consultants, advisors. If this would have worked for them, they would have done it. It's one thing to create a positioning on price, But even that, as you saw with the Hertz and Advantage, they wanted to buy Advantage as opposed to have a whole section of Hertz be low cost and then Hertz have its premium pricing because that's where its brand is positioned. Well, I'll give you an example of how I see the analogy. You have certain grocery stores like Kroger, Publix, Safeway, Albertsons. Now, the great grocery stores and all, but what they found is the public, the consumer, moms in general, really are liking the organics. So they built these organic aisles and sections in the fruits and such, and it's helping in sales and such. But the difference between that Safeway with an organic aisle and Whole Foods, which is a pure play, is the difference between us, Ecologic Transportation, and one of the big box car rental companies. It's simply put, you can't just have an aisle and have people see you as they would see Whole Foods. And we want the consumer to see us as the Whole Foods of car rental.
Right. Okay. That makes perfect sense. Let me shift to some shareholder investor type questions. What's your current share structure?
Right now we have 26. You know what? I should have had all the hard numbers, but I'm going to give you, and I don't have my Q. I would tell people right now to go to the Q on Edgar. We just filed it, but it's approximately 26 million shares on there. But you'll see, if you note, there was an after event, which means it happened after the filing period. And that event was a settlement with William Plumunden and R.I. Heller, which is his business company. I would like to note that. I'm going to talk about the cap structure, but we started this company pretty much with Bill Plumunden, and to say that he was anything but foundational would be a misnomer. He was not only foundational, but he gave clarity, he gave vision to the business, and his thumbprints on it. And we started to part differences of opinion and such, and he was looking at a different direction, and it got a little acrimonious, as these things do. And as a lot of people know, we ended up, as a lot of people do reactively, because it's on the boards and people talk about it, we ended up going to court, and he went to court at us, and I went to court at him. And the reality is, though, we realized that this is something, we had always appreciated each other, and this is something that we should not only not be in court, but we should settle. And he didn't want to see Ecologic Transportation damaged. He didn't want to see the shareholders hurt. He also had invested a great deal of his time and acumen into the company. And but he knew, too, he was going to move on and had there was a settlement, meaning he felt that he could and felt that it was in his purview to give back or cancel some of the shares that were issued to him and cancel some of the debt that was on the books. And we're grateful to be, and I mean that sincerely, and so is the board, grateful that Mr. Plumunden and R.I. Heller and Ms. Davis decided that that's what they would do. And how that, and why I bring that up is it's very important, because a lot of people look at our cap table and I think they see the 26 figure. It should be on the Q again, 26 million and change. Well, in this settlement with William Plumunden, we canceled 3.5 million shares. Okay, 3.5 million shares. We then also canceled approximately, and I can get the hard numbers and add them. I should have had them, and I was all bothered because Nesbitt couldn't be on this call. of the interview. Approximately 875,000 in debt we canceled. Now that debt had a convertible feature at 32 cents. I'm going to give some rough numbers, but I believe it was right around 6,200,000 and something, 200 and change in shares that are off our books on a fully diluted basis.
Okay.
And I think that if you have your number crunchers out there, and I'll make it available now that I've talked about it, I will. And I'm not as comfortable as having our controller, our CFO, and the our auditor tell me exactly, specifically to the dime what it is. But we're looking at potentially between 16 and 21% increase in the capital worth of the company by that reduction. I mean, someone can add the numbers up, and there's other options out there. So on a fully diluted basis, I don't want to be held to the specifics, but it's above 16%, and it's probably below 21%. That we've increased people's. People have been talking. I was told by some of our shareholders that they were worried about dilution, and because a shareholder was selling recently, and we finally had all this good news. Well, first thing was there isn't a dilution. In fact, just the opposite. I think you'll look when you read the 10K. There was an increase in the capital worth of the company, meaning the share value would have gone up by whatever that percent is. It's not reflected in the stock. And another thing is, I don't have any personal view on whether someone sells shares or buys shares. That's what everyone's prerogative is. I think that's what people do. They sell shares. If they want to sell shares, they sell shares. They want to buy them. They want to hold them. Do whatever they want. So,
right.
but I did want to make one thing clear though, that there wasn't none of this. And I don't understand clearly why people use the word dilution or dilutive event, but I figure if somebody's selling shares, they're selling shares, and that's just the way a public company works. I think that's natural. But I would have people go to the K and look at, the Q, and look at how the settlement was reflected. Look at the 875,000. Don't hold me to the hard number, but right around there, and converted it to 32 cents. I think it was 2.3 million some odd shares, and I believe that the total was 6-7. It was a substantial amount of our capital. We might put a release out. I've been requested actually by some people to put an 8K to show what the actual fully diluted effect was. And I might do that. The company might do that. I'm not confident doing it. I'm not but I'll have the CFO and the auditor do it and give me the specific and the date, and then have my lawyer vet it, and we'll put it up as an 8K, and then people can say, there it is. There's the cap table.
That's a great answer, and I think filings mean a lot, and when it comes to potential revenues and actual revenues and share structure and all that other stuff, referring to the filings is definitely the right answer. I'm curious, do you have a website?
Yes, we're at www.ecologictransportation.com. And we're going to update some stuff, guys, because we are. Like any company, we kind of got punched in the chin. We got a little anxiety-ridden because things didn't happen the way we wanted. The market didn't. We kind of like anything went through a period where we wish things would have happened faster, and let's just say we didn't market ourselves as prominently, but we have a very nice website. It's incredible, but we do believe we are going to start, and I want to apologize officially. We have a part of our website that has, and this is terrible that I'm even saying it, but it has our ecologic report. Now, the ecologic report has been written twice, and we're going to start now to put a report out. I'm not going to say how frequently, because I'm not the one who's going to write the report, and I need the Bill Nesbitt to tell me. But I want to apologize to any shareholders who might be listening that I personally, as the chairman, received a bunch of emails that I thought were spams, and it was people requesting the report, and I just feel terrible about that. So I might as well publicly do a mea culpa. And I would request that if you didn't get answered, if you could send back in. We now have a procedure that will be a response. You'll go on a list, and you will be getting a report. These reports will give you a snapshot of the company, snapshot of the date, time, and the capital table. And just so you guys all know, from an investment or from a share issuance standpoint, we do not, if we enter into, even if it's 25,000 shares or what have you, it is in our quarterly filings. But if we are queried by a shareholder, we have no problem directly responding and telling somebody if it was in between the quarters and it's not on we didn't file an 8K because, one, they're expensive, and two, it's not necessary if you have a 50,000 share issuance. But if asked, if requested, especially if someone does it in writing, we will respond with the share issuances that are not reflected on our quarterly filing. And by the way, it's been as part of our mandate, part of our management since the day we started, that if queried, if requested, we would respond with any share issuances. And I know that on these small cap companies and such, these are concerns. And so I did want to make that. No, but you look, there's an investor relation. We love the planet, the lighter footprint. Join us. We brought in a guy who's going to do the Twitter and the Facebook and start to get us out there a little more active. You know, like I said, we didn't get the acquisitions that we wanted in the time frame. I think a lot of the wind was kicked out of the sails. But William Nesbitt coming on, and the good people at ACE deciding to, let's make a run with these guys. It's really pumped up the sales, and so we're excited. We're excited. You're going to see it reflected, and we also would like people, if they have ideas, if they have contributions. I don't mean financial contributions. I mean if they have suggestions, we're open to them. We're looking to start to really reestablish and connect to our shareholder base.
When I normally see that when it comes to the not the attention to detail on the website is when companies communicate a lot via conference calls and those type of things. I'm not sure if you do that or plan to do that. Is that something you're thinking?
We are, and I have to tell you that I went out and I said to the shareholders on the last time I went out that I was going to do it, and a couple of shareholders reminded me on a frequent basis that I didn't, with some kind words. And but the answer is yes. In fact, we're going to do a conference with you guys. It's going to be an interview like this where we're going to talk about, I think we've targeted, let me get my calendar, but I believe we've targeted Wednesday, hold on real quick, Wednesday the 29th. And I'll be back from, Bill Nesbitt and I return from China on Saturday the 25th. So on the 29th, we are fortunate enough to get an interview with you guys again. We're going to be.
That's great. I'm sitting here typing to two different people. Wednesday 29th is he coming back on?
Yeah.
Oh, that's awesome. That's
right.
Awesome.
It is. And here's what's cool about it. We did a deal where we and begrudgingly, I have to tell you, I didn't want to do it, but the board really said, hey, Withrow, this Ecologic Systems is a great idea. It might be a little too highbrow. We got to focus on car rental. Bill Nesbitt said, car rental. And so I finally said, okay. And we merged systems into a company called Amazon Florestal. I'm not going to go into the whole thing, but there is a shared dividend of that company, once the company is registered, that is going to go out to the shareholders. And I wanted to explain what that meant. I wanted to explain about the company because I don't think we had properly done it in the 8K. In fact, we just filed today the third amended 8K. It's a super 8K, so it's a long document. I would recommend people to look at that document, but if you're still confused, because it's a lengthy 8K, I would recommend that you look for hearing about this on the 29th. If again we're so fortunate to do it, my goal was to try to do this again and not cram it in, Cap, all in one sitting.
Oh no, that's great. I'm pretty excited to hear about your trip to China and how that all develops and your selection. And I mean, you might not know it by then, but at least you'll be able to talk about pieces of what you were looking for and the positives and negatives and all that. No, that's absolutely awesome. I mean, we've covered a lot of information tonight. Is there anything in particular that I didn't address that you would like to?
No, I wanted to make sure that people did know that a lot of people talked about this with William Plumundon and the lawsuit. And personally, to me, it was we should have never gone into a lawsuit with each other. We should have sat down and realized that he added a lot of value here, and hopefully that the shares that he owns turn into a great source of value for him. And I wanted to get that. I really wanted to get that across because it bothered me because we worked hard together for so long. I didn't want the feeling that there was some legacy acrimony going on. That the company basically is now hitting its stride. Yes, it is. Stumbling. Not stumbling. It's a bad word. It's doing a lot of stuff. Meaning going to China, going to Italy, to India, negotiating new contracts, completing the acquisition ACE, looking into doing due diligence on other car rental, regional, tier 2 regional car rental companies here in the United States, looking at strategic opportunities in Brazil and UK right now. So we're doing a lot, and it might seem a little frenetic, but it's been our plan. Literally, this has been our plan. What we're doing right now, Sands Ecologic Systems, this is the plan that we had when we formed the company. And the cool thing about that is most of the companies I have found that succeeded, they stayed with their program as long as it was justified. They were honest to themselves. I tell you, I wouldn't be doing this. I put up, well over, I don't know, a little less than $1.8 million or somewhere around that. And I earned. I think that every dime was well spent. Meaning, you've got to have a passion for what you do and also a belief that it's the right thing to do. You can't lie to yourself. And it's not about telling the investors, some are shareholders and all this stuff. When you're putting in 60-hour weeks, you're away from your family and your kid and all that stuff that really what life's about, you got to believe in what you're doing. You got to believe, you have to think that you're doing something for a reason. And I think that right now, I think we were tested for a couple of years and been beat up. And now we're hitting our stride, and it couldn't have happened at a better time and with a better group of people.
That's great. Well, Mr. Withrow, thank you very much for taking the time to speak to our audience, and we're really looking forward to having you back on the 29th. Pretty excited about that.
Thank you, Cop. I really appreciate it. Thank you very much.
All right, sir. Have a great evening.
All right. Bye-bye.
Bye-bye. That was Mr. Edward Withrow III, founder and chairman of the board of Ecologic Transportation, Inc., stock ticker EGCT. Man, that's some good stuff. He's a very, very dynamic and articulate individual. Quite very smart.
Excellent job, Cop, as always.
That was all him. He's you can tell he's in the trenches and digging real hard on everything that he's doing. Which I just want to kind of recap a couple quick things. I know that was a a longer than normal interview. But I think to understand and grasp some of the concepts and his market segmentation and how he's doing his product placement and how he's providing that product placement for other car manufacturers from other countries. I mean, think about that. There's going to be people, fighting for that ability because he's already got it set up. He already has the distribution node. I mean, the whole thing. Slowly put in. You don't have to put in gigantic fleets. At each one of these locations, put in 2, 3, 4 cars. And if I read my due diligence, I know that Ace Rent-A-Car had something was all over the place, all over the United States. So I don't know how many how many different locations they have, but it's got to be over 200, I'm sure. But good stuff, real good stuff, guys.
Impressive, great job, awesome.
All right. Well, that's the interview for this evening, and I think you guys have radio in the morning?
Absolutely. We want to remind all our listeners to tune in Monday through Friday, 9 a.m. Eastern Standard Time. As always, thanks for tuning in to STT, and we're out.
Thank you for listening to Stock Traders Talk Radio. All views and topics talked about on Stock Traders Talk Radio is solely for entertainment purposes. We are not professional financial advisors and always recommend you seek the advice of a professional financial advisor. Never invest in any stock featured on our show unless you can afford to lose your entire investment. The information contained on our show is based on sources which we believe to be reliable, but is not guaranteed by us as being accurate, and might not be a complete statement or summary of the available data. Stock Traders Talk Radio advises that the investments in companies profiled are commonly considered to be high risk, and use of the information provided is at the investor's sole risk. Thank you for listening to Stock Traders Talk Radio.